Welcome to the podcast about venture capital, where investors and founders alike can learn how VCs make decisions and reach conviction. Your host is Nick Moran, and this is the Full Ratchet.
Welcome to another special release of Investor Stories. On this installment, the experts discuss a startup that they did not invest in, why they passed, and if there was a key learning that now informs their approach. Here is the segment called Why I Passed. On today's special segment, we have Jonathan Hung of UVP. Jonathan, can you tell us a story about a good or a bad pass? A story about a startup that you passed on.
In 2012, I got this fourth investment opportunity I looked at, right? And it was between, I got a resource, my friend, he was a managing director at Goldman Sachs, and he sent me two companies. And I should have just done both of them. But one was a YC company that was trying to help diabetes care management. I actually invested in that company. Unfortunately, like a year or two ago, it shut down, for whether it was bad management or it just didn't work out. That happens, right? You don't expect to go 10 for 10. I mean, if you go, 3 for 10, you're going to the Hall of Fame for baseball. So geez, if I get the hit 300, right, that's more than enough. But the other company I got, because I was still young, relatively in 2012, getting into venture. I mean, I understood public equities, but it was a company where I got pitched where it was a $20 million valuation. I thought that was high. And it was a gaming company, kind of where you pretend to buy and sell stocks every week. It was almost like fantasy trading, but for stocks. And I'm like, who's going to play this game? This isn't Angry Birds. This isn't Plant vs. Zombies. This is not Fruit Ninja. How are people I know I'm interested in investing because I, did that for a living. I had my Series 7, 63, and I didn't understand that, they're collecting data because they weren't making money. You couldn't, at a $20 million valuation, you couldn't actually trade stock. You couldn't get on New York Stock Exchange and do the brokerage trading. And I just thought at the time, why is it called Robinhood? And so I turned down Robinhood at 20
brutal
in 2012. But you know what? They pivoted. Obviously, they're totally different than what they were there. But there are some gaming aspects, right? Where it's you get confetti, you just won, right, by investing. And it's I didn't get that. Whereas I was thinking about the idea versus the founders. I should have focused more on the founders. That was a rule that after that, okay. And there's many opportunities for me to get back into Robinhood. But, that 25 could be worth, if I had done 25K back then, it'd be worth 100 million probably today.
Yeah. On today's special segment, we have Santosh Sankar of Dynamo Ventures. Santosh, can you tell us a story about a good or a bad pass? A story about a startup that you passed on?
Gosh, as we were thinking about the early days of Dynamo is when Jet was thinking about P44. And I remember kind of approached us to say, hey, is this something you guys would invest in? And it was, but we didn't have a fund raised. And knowing what we know now, Nick, about warehousing deals and being a bit more clever, perhaps that's the one we should have done, but we're too stupid, too foolish, I guess, and didn't know our trade enough. But it is what it is.
If it makes you feel any better, I saw 4 Kites at the pre-seed seed stage at an angel group pitch.
Yeah.
And I loved it. And it was, I think, my first or second meeting. I was brand new to angel investing. And the group hated it. And I was like, I must be an idiot. So
it is your old core as a supply chain person back in the day.
Right. But I was new to angel investing. So I'm like, I must not know what I'm doing here.
Yeah.
I still give the guy grief that was sitting right next to me in that meeting. On today's special segment, we have Matt Cohen of Ripple Ventures. Matt, can you tell us a story about a good or a bad pass? A story about a startup that you passed on?
There's a handful of them. I think one of the companies that we saw very early on from a friend of mine who worked at Menlo Ventures, a company called Drata. They do SOC 2 compliance. You've probably seen all their advertisements and G2 and Capterra reports, but we saw them very early on. They were just getting started, pre-product. And unfortunately, we had just launched our second fund. It wasn't really in our wheelhouse where we wanted to invest because it was pre-revenue, and we passed. And I love the founders. Is still to this day, we talk to them and they're very supportive of our own podcast. And we have a partnership with them with our portfolio companies. But They grew extremely quickly. I think one of the fastest companies at 10 million in revenue and run rate in like a year or so. And they just raised like $100 million from, I think, GV at like $1 billion plus valuation. So that one stung pretty quickly for us. And yeah, so we were one of the first, I think the first to see it at the pre-seed stage, and we passed.
Brutal. That will conclude this installment of Investor Stories. If you're enjoying the program and would like to see it continue, take a moment and leave a 5-star review in iTunes. Also, if you'd like updates on new content from TFR, go to fullratchet.net and sign up for the newsletter. Okay, that will wrap things up for today. Until next time, over-prepare, choose carefully, and invest confidently. Thanks for joining me.